I want to thank everybody for joining us for our next in our series of property owner webinars. Today, we're going to talk about appraisal information for new homeowners. And this is just to give new homeowners an overview of the property tax system and some information that you need to know as a new homeowner paying property taxes maybe for the first time. So hopefully you'll find some of this information helpful. We also have other videos on our website, www.traviscad.org/videos, and you can see the other webinars in our series. And I might mention a couple of them as we go through if you need to get to more detailed information on a couple of the topics, but we will get started. Go ahead and start with our appraisal information. So if you have any questions, feel free to use the Q&A box on the Zoom meeting. We will go through at the end and look at all the questions that we have and try to get to as many questions as we can at the end of the webinar. So first off, we're going to talk about who does what in the property tax system, because there's a couple different players in the system. We are the appraisal district. My name is Marya Crigler. I'm the chief appraiser of Travis Central Appraisal District. And at the appraisal district, we determine the market value. We appraise properties to determine how much they would sell for as of January 1st, which is our assessment date. So our primary duty is to appraise properties. We send out a notice of appraised value to property owners, letting them know what is the value that we determine for their property. We handle any protests, and then we administer exemptions and deferral applications and maintain some property record information about ownership and maintain maps. Those are the functions of the appraisal district. You also have your taxing units. And when we say taxing units, we mean governmental bodies such as your city, your county, the school district. You may be in a MUD, municipal utility district, or an emergency service district. Those are all considered taxing units. And what taxing units do is they're going to set the budgets that they need to provide the services for a school district. They provide the education. Cities, they're going to provide police. They will provide fire. The county will provide sheriffs. Emergency service districts will provide EMS and fire. So all those taxing units provide services to the citizens. And in order to provide those services, they collect property tax. So they're going to set their budgets, the budgets that they need to provide those services. And then they will set a tax rate that when it's applied to the appraisal district will determine how much each property owner pays, but will also meet the budget that they set so that they can provide the services. So they'll determine the overall tax burden. Again, the appraisal district is going to determine the appraised value for each property. So we're kind of divvying up. We set the slices, but the size of that overall pie, that is determined by the taxing units and the budgets they set and the tax rates that they set. And then the third player is going to be the tax office. And they're going to calculate and mail the property tax bills. They do all the collections of any property tax payments, but they also do a lot of other things. They handle your vehicle registration. They do the license plates. They do voter registration. They do alcohol and beverage permits. A lot of things are done by the tax office, but they actually are the collections arm for the property tax system. So the calendar for the property tax system is pretty defined by law, legislated. January 1st is an important date because that's the assessment date. It's also the qualify date for most homestead exemptions, but appraisals are done as of January 1st. What would the property sell for as of January 1st? Changes that occur to the property after that date are not recognized until the following year. So January 1st is a really important date for appraisals because that's our benchmark that we're using to determine the property value. April 1st is an important date. That's the first date that we start sending out notices of appraised value. They're going to come out throughout the month of April, but April 1st is the earliest date that we will send out notice of appraised value. May 15th is an important deadline because that's the deadline to file a protest. Once you get your notice of appraised value, if you disagree with the market value, you can protest that to the appraisal district, and the deadline to file that protest is May 15th. July 25th is an important date. That's for the appraisal districts to complete all your protests and give the information over to the taxing units so that they can calculate what their tax rates need to be. August and September is the time frame when most of the taxing units are going to have their budget hearings, and they are going to set and adopt their tax rates. And then in October, the tax office will begin mailing property tax bills. November, if there is an election that has to happen on a tax rate, the voter approval election happens on the first unified election date, and that's usually the first Tuesday in November. And then January 31st is the date that the tax bills are due. So the bills go out in October. You have until January 31st to pay your tax bill. So there are three factors that go into determining the total amount of taxes any individual property owner may have to pay. The first thing that comes through is the appraised value, which is established by the appraisal district. Second is the exemptions, if any, to which the property may be entitled to. Exemptions are administered by the appraisal district, meaning we take the application and we will apply the exemption, but whether or not a property, an exemption is offered is something that is in the discretion of the taxing units and the legislature. So the legislature tells us what kind of exemptions can be offered and if the exemption must be offered by state mandate. And then there are other exemptions that are local option that are only effective if the local taxing unit adopts that exemption. So exemptions are the second factor. And then the third factor is the tax rates set by the taxing units. So your appraised value minus your exemptions equals your taxable value, and your taxable value times the tax rate equals how much your tax bill is going to be. And again, the purpose of the appraisal is not to determine how much your overall tax burden is, but just to make sure that the tax burden is distributed fairly amongst all property owners so that everybody is paying their fair share of taxes based on the market value of their property. There are some definitions that you need to know about the appraisals that we do, and when we talk about values set by the appraisal district. The first one is market value, and that's a unique term, and it is the value based on what your property would sell for as of January 1st. So we determine your market value, we look at comparable sales and say this is how much your property would sell for as of January 1st. That is the market value. That is purely a reflection of what is going on in our market. And you know, anybody that has recently bought a home in the Austin market knows how very robust the market is. So we are just reporting what we see happening in the market. The second term is the assessed value. And this is a reduced value based on limitations provided by the legislature if you have a homestead exemption. So if you have a homestead exemption, there's a limitation on how much your assessed value can increase. Your market value is going to go up regardless. It is a reflection of what's happening on the market, and there is no limit on how much the market value can go up. But your assessed value is limited, and it's limited to last year's assessed value plus 10%, or the current market value, whichever is lower. Now, usually in Austin, our market has not really had very many downturns. So usually most people are seeing the assessed value being calculated as last year's assessed value plus 10%. And again, assessed value is the one that has the limitation. Market value does not have a limitation. And the third value term that you need to know about is taxable value. And this is your assessed value minus any exemptions, and that becomes your taxable value. Now, your taxable value is going to be different for each taxing unit because each taxing unit can adopt different exemption amounts. So your taxable value will be different for each taxing unit. But again, that is your assessed value minus any exemptions that you may be entitled to. In determining your market value, the Constitution and state law requires that appraisal districts appraise property at 100% of market value. And they define for us what market value means. It means what a property would sell for, given that it's been put on the open market and there's a willing buyer and a willing seller and nobody is in a position to take advantage of the other. That is a market transaction, and we are required to appraise properties at 100% of market value. Unlike some other states, we don't have any allocation or millage rates that make that something less than 100%. It is always going to be 100% of market value. And again, the assessment date for us is January 1st. So we'll use sales of similar homes to determine the market value of your property. We will look for homes in your neighborhood or your general area and use that information to help us guide our market value determinations. But we'll also look at the characteristics of your property so that we're identifying the unique individual characteristics of your property differently than other properties. So some of the characteristics we look at are things like the size and the type of improvement. Is it a single family residential? Is it a detached residential? Is it a townhome? How many square feet is it? Is it 1 story or 2 story? We'll look at construction materials. Is it a slab or a pier and beam foundation? Does it have a regular composite shingle roof, or does it have a tiled roof? We'll look at the quality and the condition of the materials. And then we'll look at site characteristics and other things that go into it. Does the property have a swimming pool? Or is the garage detached, or does it only have a carport? Those are all characteristics that go into our model for appraising properties. And if you want any information about what kind of characteristics we have on your property, that's all available on our website. And you can go to our website, www.traviscad.org, and go to our property search feature. And you can look and see the individual characteristics that we have for your individual home. If you are entitled to an exemption, and there are several exemptions that property owners can qualify for, that can lower the taxable value of your property. And when you lower your taxable value, then your tax bill can be less. You are eligible for a general residential homestead, and that's the most common exemption that property owners qualify. You're eligible for that if you own and occupy your house as of January 1st. So January 1st is not only our assessment date, but it is also the qualify date for a exemption. So if you purchased your home in June, you would not qualify for the exemption that year. You will qualify for the exemption the next year that the January 1st comes around. So as of January 1st, if you qualify for the exemption, you're entitled to a general residential homestead exemption. And again, this is for property that you own and occupy. It needs to be your principal place of residence. It does not apply to property that you may own as rental property or a vacation home. You cannot claim a homestead exemption on those kind of properties. It has to be property that you own and occupy. And also you can only claim one homestead exemption. You cannot claim another homestead exemption anywhere else in the state of Texas or anywhere else in the United States. You may only claim one homestead exemption, but you may claim that if that's property that you own and occupy. Something that's really important for new homeowners, and we see them oftentimes, people try to take advantage of a new homeowner, and you'll get all these solicitations in the mail, and they used to always come in on a pink sheet and very urgent, and you would need to pay them $50, $75 to $100, and they would file your homestead application for you. And I'm here to tell you that that is a scam. You do not have to pay anybody to file the homestead exemption. It is free. There is no fee to file an application. You can file that application if you're in Travis County. We will send you an application if you don't already have one, and we see that your address matches your property location. We're going to include an exemption application and mail that to you every year. And you just need to fill that out and mail that back into us. Or if you want to, you can go online again to our website, www.traviscad.org, and to our e-services tab, and you can file your exemption application online. And again, it is absolutely free to file your application. There's no need for you to pay anybody to do that for you. So the kinds of exemptions that you may be entitled to, and there's quite a few of them, and I'll go over some of these briefly, but we have a whole nother video on our website. Again, if you go to www.traviscad.org/videos, you'll see a series, and we did a series in our property owner webinar series for specifically exemptions. But just generally, the exemptions that are most common that people will apply for, again, the general residential homestead exemption. And again, you own and occupy the property, you're entitled to that residential homestead exemption. There's also an exemption if you are over age 65. And that exemption comes in with a lot of additional benefits. The over 65 exemption is state mandated. So that is something that is required by state law for all school districts. So all school districts must offer the over 65 exemption, and that offers an additional $10,000 off of your assessed value. So it lowers your taxable value by another $10,000. But the huge benefit of the over 65 is that it creates a tax ceiling. So in the year that you turn 65, your school taxes will never go above that amount. It creates a ceiling on your school taxes. And when school taxes are 50% or more of your property tax bill, being able to get that frozen and stay at that level is a real benefit to property owners that are over 65. There's also a disabled persons exemption, works in the same way as the over 65. Again, it is state mandated that school districts must offer this. It's offered in the amount of $10,000, and it also has the tax ceiling that is associated with it. There is a 100% disabled veterans exemption. So if you are a disabled veteran with a service-connected disability and you are 100% disabled, you can get an exemption from all property taxes from all taxing units, and that is state mandated. But again, you have to be 100% disabled veteran with a service-connected disability, and you'll have to provide a copy of the letter from the Veterans Association, Veterans Administration. There's also a disabled veterans exemption that's in a lesser amount, and that exemption amount can range anywhere from $5,000 to $12,000, but those are for veterans that are less than 100% disabled. There is a surviving spouse of an armed service member killed in action. That one's very much like the 100% disabled veterans. If you are the surviving spouse of a service member that was killed in action, you can get 100% exemption. Also, if you are the surviving spouse of a first responder killed in the line of duty, you may also get 100% exemption. And then the last one we have is something that is new. It's a new exemption. It was adopted by the legislature back in 2019, but it's the first time that we've actually had a disaster that this exemption could apply to, and that's a temporary disaster related exemption. And this would apply because of the ice storm Uri that we had and the big freeze that we had. A lot of properties were damaged because of that disaster. It's a physical disaster. So you may qualify for that temporary disaster. That disaster exemption is only applied to the improvement, the building. It does not apply to the land, and the property must be at least 15% damaged in order to qualify for the exemption. So 15% is a lot of damage, but if you are at least 15% damage, you may apply for the temporary disaster related exemption. That exemption is something that you can apply online. The deadline to file that exemption is May 28th. And again, we provided more information on that specific exemption in our webinar that we did on homestead exemptions. The disaster related information is towards the end of that webinar. So there's some information that you have to provide when you file your exemption, whether you send it in by mail or you provide it online. One of the key things that you must provide with any application is a copy of your Texas driver's license or your Texas identification card. And the address on your license must match the property address for the property that you're wanting to claim your exemption on. And this is true for whether you're doing an over 65 or a general homestead exemption. A copy of your driver's license is required. If you're looking to get a Social Security, a disability exemption, then Social Security Insurance, SSI, has a disability letter that you would want to include with your application. If you are a veteran, either the 100% disabled veteran or a veteran with a percentage of disability, you're going to want to include a copy of your letter that you got from the Veterans Administration. If you are the surviving spouse of a first responder, you're going to want to include the letter that you get from the Texas Employee Retirement System. And then if you are filing for the temporary disaster exemption, you're going to want to include your cost estimates to repair and any other supporting documents, insurance claims, photographs, along with your exemption application. We've got more information online. You can go to www.traviscad.org/homestead exemptions. We'll answer, there's a lot of frequently asked questions that are answered on that website. And then you can also call our office at 512-873-1560, and they can answer questions for you and help you with any exemption questions that you might have. So the notices of appraised value, once the appraisal district appraises your property and we administer and apply any exemption that you may qualify for, we're going to send out a notice of appraised value, and they're mailed out in April. They'll go out again starting in early April, but most property owners will receive theirs by mid-April. You may receive either a formal letter notice or you may receive a postcard from the appraisal district. It depends on whether or not your property value has changed substantially. If you do not receive the mailing or you can't find it, you can always go to our website, and that information is on the website as well. So as soon as we mail out notices of appraised value, we also will post those on our website. So if you lost that piece of mail, it gets misplaced, you can still find it on our website. And the notice of appraised value, in addition to providing you information about the market value, and we'll give you both the market value that has been assigned to your property and the assessed value, which is the limitation value if you've got a homestead. Both of those numbers will be shown on your notice of appraised value. But we will also show you for each of the taxing entities, if you are entitled to any exemption, what exemption you're claiming for that taxing entity, what exemptions they grant, and how much that exemption is worth. And there can be quite a difference between the amount the exemption is worth based on the taxing entity. Because again, if it is a local option exemption, then the taxing entity has an option to choose how much they're going to grant for the exemption. So for example, Travis County grants the homestead exemption, and they grant it at the maximum level they can, which is 20%. The city of Austin also grants that homestead exemption, but they grant it at 10%. So there can be quite a difference between how much that exemption is worth, depending upon the taxing unit and how much they adopt and choose to grant in terms of the exemption. But that information will be provided to you on your notice of appraised value. Also included with your notice of appraised value will be a form if you don't agree with the market value determination that we made on your property, or you don't think that your property is being fairly appraised when you compare it to your neighbors. You can file a protest with the appraisal district, and a protest form is included with the notice of appraised value. It's important, and I've got to stress for you, you are protesting the appraised value of your property, not your taxes. Again, the appraisal district doesn't set the budgets, nor do they set the tax rates. So we cannot address any protest that you cannot afford your taxes. What we can address is a protest about, is the appraised value of your property correct? So feel free to protest the appraised value of your property, but if you've got an issue with the amount of taxes or the tax rate or the budgets for the taxing entities, those are issues that will need to be addressed with the taxing entities, and we'll provide you more information with how you can do that through those avenues. But for the appraisal district, the deadline to file the protest is May 15th, or 30 days after your notice of appraised value is mailed. And it's important for property owners to realize that when we're protesting the value of your property with the appraisal district, we are determining market value, and you are protesting the market value. If you are somebody that has an assessed value and you've had that assessed value and had the benefit of that for a long time, your assessed value may be low enough that even if we make an adjustment to your market value, it may not make any change to your assessed value. Again, the assessed value is a calculation that is done by state law, and that calculation is last year's assessed value plus 10%, or the current market value, whichever is lower. So property owners who have had their homestead exemption for a long time and have had a lot of benefit of assessed value limitations may not see much change because of a protest. Because again, market value reflects what the property could sell for. Assessed value is the one that is limited, but what you can protest is the market value of your property. You can settle your protest. If you file a protest, you'll have an opportunity for an informal meeting with a TCAT appraiser. We are doing all of these electronically, so there's a telephonic phone call that you can have with an appraiser. We have screen sharing capabilities, so you can share any evidence that you may have with the appraiser, and they will talk to you about how we appraised your property, and if there is any adjustment that needs to be made, if there is a characteristic about your property that we have that is incorrect, we can make those kind of corrections. If you just recently purchased your property and you've got your sales, your closing statement for us, and you provide that, and that shows that we've appraised your property for more than what you purchased it for, we will absolutely make those kind of adjustments for you on an informal basis with an appraiser. If you don't want to do the informal with the appraiser, or you don't agree with the appraiser on the offer that is made, you still can go before the appraisal review board. And the appraisal review board, they're often called the ARB. They're an independent body. They are appointed by the local administrative judge. They are not TCAT employees. Again, they are an independent body appointed by the local administrative judge, and their job and responsibility is to hear property owner protests. They hear the evidence presented by the property owner. They hear the evidence presented by the appraisal district, and they are going to weigh that evidence and come up with a determination of what the fair value should be on properties. Again, they are not employees of the appraisal district. They are an independent body appointed by somebody else. We don't have any influence over the ARB members. Both sides present their evidence to the ARB, and the ARB will make a determination. If you go to the ARB and they make a determination and you are still not satisfied, you still have more opportunities to pursue a protest beyond the appraisal review board. You can go to the State Office of Administrative Hearings, you can go to arbitration, or you could go to district court. So the ARB is not the last step for you. There are more opportunities beyond that, but the ARB is the most informal of those alternative steps that you have. If you need more information, and again, there's a lot of information on our website, it's www.traviscad.org. I know I've mentioned it a lot, but that's because there's so much available to property owners on our website. You can go to our property search tab and you can look up your property or any surrounding properties and get a lot of information about the property characteristics from our website. You can fill out any online exemption applications on our website. You can do an online protest. In fact, if you're going to file a protest, the quickest way to get your protest filed is to do it online. You can download and print forms if you want to mail them in. We also have our property owner webinars in our video series, and we also have a section for frequently asked questions. So our website is a treasure trove of information for property owners to help you navigate through the system and get more information about not only your property, but about how to proceed and file protests or submit your applications for an exemption. Once the appraisal district is done with our job of appraising properties and we resolve the protest, now the taxing units come into play and their role comes into play. And while the appraisal district's values may affect your tax bill, they don't necessarily increase or decrease the total amount of taxes paid by the taxing to the taxing unit, because that's really going to be determined by the taxing unit's budget and by the tax rates that they set. So in this example, you see two pies. The appraisal district is responsible for slicing the pies, and those pie proportions are pretty much the same, but you can see that one pie is significantly bigger than the other pie. The size of those pies, that is what is being determined by the taxing entities. And you can go to travistaxes.com, and that's a website that you can go to. It usually becomes most active in August when the taxing units are setting their information. They are required to post on that website what their no new revenue rate is. And a no new revenue rate is, what does the tax rate need to be this year to give us the same amount of money as we got last year? So that's a no new revenue rate. They've got to post their no new revenue rate on there. They've got to post their proposed rate. What are they proposing in terms of a tax rate? They've got to propose their voter approval rate, which is the highest rate that they have to, they can go up to. Usually it's about 3.5%. But if they go above that voter approval amount, then that automatically triggers an election where voters can go through and vote on whether or not to approve a higher tax rate. And it gives you an estimate of what your taxes are going to be. And again, that's all on travistaxes.com. It's a separate website from the appraisal district's website, but it's travistaxes.com, and it's going to give you all of that information that you need. And I strongly encourage you to go out to that website in August, in September, when the taxing units start setting and having those budget discussions, so that you can get more information about it. The other thing that that website is going to do is it's going to give you information on when are the taxing units having their budget hearings and where are those hearings going to be, so that you have more information so that you can participate in those budget hearings. I can tell you that we have, 100,000 people will file a protest with the appraisal district, but only 7 people will show up at a budget hearing. And the budget hearings are really what determines the size of those pies. So property owners are missing an opportunity to address issues and concerns they have with the affordability of their taxes by not participating in that side of the equation. And the goal of the travistaxes.com website is to give you the information that you need as a property owner so that you can participate in that aspect as well. After the tax bills, tax rates have been adopted by the taxing unit, then your tax bills get created. And the tax bills are calculated and mailed by the Travis County Tax Assessor Collector's Office. Bruce Elfont is your assessor collector. Again, this is a separate office from the appraisal district that does the collections of property taxes. Bills are generally mailed out in October and they're due by January 31st. Most homeowners, particularly if you're a new homeowner that has a mortgage, you're never really going to see this because most of that is taken care of by your mortgage company in your escrow accounts. But whenever your mortgage company says you've got a mortgage shortfall or an escrow shortfall because of property taxes, it's usually because there's been an increase in the tax rate and your property tax amount has gone up. And I can tell you there was an election this year. City of Austin had a big referendum for additional transportation that they wanted to do, and a significant increase in their tax rate would happen because of it. So there was an election in November and voters approved the referendum and approved that tax rate. So tax bills went up substantially after that election happened. And we got a lot of calls by property owners wondering, how come my tax bill is so much higher? I wasn't expecting it to be this much higher. And that was because as voters, we approved that higher tax rate. So those elections and those tax rates and all those hearings, they really matter to you. They really matter to you as a property owner. And we want to make sure that you are educated so that you can also participate and understand when there's an election, understand the consequences of those elections and those votes. The tax bill, and something that's important for you to remember on your tax bill, the exemptions are taken off of your assessed value. You will not see exemptions reflected on your tax bill because tax bill is only reflecting your taxable value. Tax bills can go up by more than 10% a year. Again, remember we said that your assessed value is limited and it's last year's assessed value plus 10%. Well, if the tax rate goes up 50%, your tax bill may go up more than 10%. But that is because of the tax rate that got adopted, not because of the appraised value or your assessed value. So your tax bills potentially could go up more than 10%, depending upon the budget set and the tax rate set by your taxing units. And also the over 65 exemption, when we talked about it freezing your taxes, it's important to remember that it only freezes your school district taxes. It does not freeze any other taxes. Only school districts are frozen by state law when you look at your over 65 exemption. Some of the things that surprises new homeowners, and these are some situations that come up and that we hear often, we get questioned about. So here's an example. Jack and Jill have owned their home for 30 years, and Jack is a disabled veteran. Both Jack and Jill are over 65, and they pay $2,000 a year in property taxes. In 2020, Jack and Jill sold their home to John and Jane. So John and Jane are new homeowners. They are young first-time homeowners. And in 2020, they paid $1,500 of the property tax bill for the house that they bought from Jack and Jill. In 2021, they are shocked to learn that their tax bill will be over $8,000. Well, the reason is because these young homeowners don't have all of the exemption benefits that Jack and Jill had. Remember, Jack and Jill were over 65. He was a disabled veteran. He had all of these exemptions. So when you purchase the home from them, their tax bill may not necessarily be your tax bill moving forward. And that's something that's really important for new homeowners to understand, particularly if you're purchasing property from older property owners, that they may have some exemptions or been entitled to some exemptions that you're not going to be entitled to. So your tax bill may be very different than what you paid at closing. And new homeowners are often surprised by this. Title companies often don't do that research behind a home's history. So as a new homeowner and somebody purchasing a property, one of the things that you're going to want to ask is what exemptions are currently on the property? What are they currently claiming? So that you can calculate and get an estimate for yourself of what your exemption may be and what your liability may be. If you're purchasing from somebody that is over 65 and you are only 30, you're not going to get that benefit of the over 65 exemption. So you not only don't get the exemption amount, but you don't get that tax ceiling. So your tax bill is going to be significantly different. The other thing that often surprises homeowners, particularly when they buy a property that has an over 65 exemption, is that the property owner with the over 65 exemption can transfer their exemption at any time. So they may sell the home to you, and at the time they sell the home to you, they have that exemption in place. But if they determine that they want to transfer it to a new house that they buy, the appraisal district is required by law to remove it from the house, the old house, and put it on the new house, which means you as the owner of that old house are going to get a supplemental tax bill because that exemption went away. So as you're purchasing property, if you're a new homeowner or if you're a realtor helping somebody purchase a home, if that property has an over 65 exemption, you're going to want to ask the property person that's selling that property, do they intend to transfer that exemption? Or are they going to let it lay in place for the remainder of the year and allow your property owner to get the benefit of it? But that is something that we see really often that catches new property owners by surprise. And we just want to make sure that you understand and that you can do due diligence. And if you're a realtor assisting people, that's something that you can look out for to help your buyer out. A common misconception is that your property taxes can only increase by 10% a year. And again, that is not accurate. If you have a homestead exemption, your assessed value is limited to a maximum increase of 10% per year. But your property tax bill may increase more than that, depending upon the budget that gets set by your taxing units and also those voter elections that we have to approve voter approval tax rates that are higher. So that is not 100% accurate. Again, only your assessed value is limited. Your tax bill can increase more than that, depending upon what kind of budget is set and your taxing unit tax rates that are set. Another misconception is because Texas is a non-disclosure state, it is illegal for the appraisal district to know how much a property has sold for. While it is true that Texas is a non-disclosure state, it is not illegal for the appraisal district to have knowledge of what a property sold for. In fact, the legislature requires us to know what properties are selling for because they defined market value as being what a property would sell for based on sales of comparable properties. So the legislature absolutely intends for the appraisal district to have sales information, to get sales information. They just don't make it easy for us. We are not automatically given that information. There's a lot of effort that goes into the appraisal district doing research and acquiring that data. But we are required to get that information. We are tested on an annual basis. The state tests us to make sure that we are appraising properties at market value. So they absolutely intend for us to have market information and appraise at market value. It's just not a disclosure, an automatic disclosure in the state of Texas. Appraisal districts raise property values to raise money for the taxing entities, and that is false. We are independent from the taxing units, and we determine our appraised values as of January 1st, based on what is happening in the market. If the market is going up, then we are going to report that the market is up and appraised values are up. If the market is going down, then we are going to take our values down and report that those values have gone down. We have just been in our Austin market. Our market has been so robust for so long that we really haven't seen a downturn in a very long time. But the appraisal district does follow the market. So whatever happened in the market the previous year, that is what the appraisal district is going to report as its appraised values on January 1st. And again, to stress this again, we get tested by the state on an annual basis to make sure that we are doing that job of appraising properties at market value. It is not discretionary for the appraisal district. It is a requirement for us to appraise properties at market value based on all of the data that we have. The appraisal district raised property values and the taxing unit kept the rate the same. So the appraisal district increased my taxes. And that is, again, that is something else that is false. Each year as we appraise our properties and turn that information over to the taxing units, they've got to calculate that no new revenue rate. And you'll remember I mentioned that a little bit earlier in the webinar, that no new revenue rate is if appraised values go up, then the tax rate should go down so that they get the same amount of money in this year that they got last year. So if appraised values go up, the tax rate should go down. If the appraised values go down, the tax rate should go up, but it's to help them create and calculate the same amount of tax levy that they got in the previous year. So keeping the tax rate the same as last year, if that same tax rate is higher than the no new revenue rate, then the taxing unit has actually increased your taxes because they didn't adopt the no new revenue rate. So yes, appraised values may go up. Again, it's not discretionary for us. We must appraise. We get tested to make sure that we're doing that job. But taxing units get to calculate a no new revenue rate, and then they have their proposed and adopted rates. And if they adopt anything above the no new revenue rate, then that is the taxing unit increasing your taxes. We are going to do another webinar. That is all the information that I have for you in this webinar, but we will be doing another webinar April 21st. Once the notices of appraised value go out, we will go through the notice of appraised value in detail for property owners and show you all the information that you need to know on that notice of appraised value, help you be able to read and understand the information that you see there, and then also give you some tools and resources on our website so that you can kind of see where those numbers are coming from, and give you a preview of how you may protest your property online on our website if you choose that you want to protest your property. And with that, I will check to see if we've got any questions in the Q&A, and we will answer any questions. The first question we have is there a limit on assessed value on rental property, or is the rental property assessed at market value? Yeah, the only time that you get the benefit of the assessed value is if you have a homestead exemption. So the assessed value limitation only comes into play if you have a homestead exemption, and rental property does not qualify for a homestead exemption. So there is no limitation on the assessed value of rental property. Those are always going to be appraised at market value. The next question is, when you file a protest, do you meet with someone one-on-one first for an informal meeting and meet with the ARB if no agreement is reached? Last time I protested, I was sent to the ARB first without a one-on-one meeting. We are doing one-on-one meetings. We've got a lot of volume. We get a lot of protests that come in. So we've been encouraging people to file their protest online. If you file online and submit your evidence, we'll review it and make you an offer. So you may be able to resolve your protest without meeting one-on-one with an appraiser. But we also make some time slots available for one-on-ones. You can get into our website. There is a place where you can get in line to do an informal, again, we're doing those telephonically with property owners one-on-one, but we do have a way that you can share information and see the information from the appraisal district, and we will have one-on-ones with property owners. So there is an availability to do it. We're not doing them in person. They are being done via telephone and by electronic screen share, but you will have an opportunity to meet one-on-one with one of our appraisers to see if you can reach an agreement. If you don't reach an agreement with the appraiser, you still have an opportunity to go on to the appraisal review board. But again, we hopefully will be able to resolve and answer any questions you might have. And if not, hopefully we can give you more information so that you can better prepare your case before the appraisal review board. The next question is, if I start construction on a home in October, but do not move in until April, how's the market and assessed value calculated, and are they determined? Okay, so if you start construction in October on your home and it is not 100% complete on January 1st, we are going to appraise that property as of its date of completion. So if it's only 50% complete, then we will only appraise it at 50% on January 1st. If you move in April, then you will be able to qualify for your exemption the next January 1st. And then when you qualify for your homestead exemption, then you will get the benefit of both the exemption amount and the value limitation that goes with the assessed value. So anybody that buys a home that is under construction, if you buy it in October, but it's still under construction and not complete on January 1st, because it's not complete. You don't qualify for your homestead exemption because you haven't moved in, you don't occupy at that point, but we will only be appraising it at its percentage complete as of January 1st. And then when you move into your property, you will be able to qualify for that exemption the next year, and you will get your assessed value limitation. And then actually the first year that you qualify for that homestead exemption, that sets your base year, and then the assessed value calculation happens every year thereafter. So the first year that you qualify for the exemption sets your base assessed value, and then every assessed value thereafter is the prior year's assessed value plus 10%. And that is all of the questions that we had for the webinar. Again, I thank you for joining us. We hope that we've given you some good information on the webinar and have been able to help you. Again, we invite you to come back April 21st. We will go over understanding your notice of appraised value and go through the notice of appraised value in detail so that you'll understand all the facts and figures that have been provided to you on that notice of appraised value. We will also follow up with another webinar about how to protest and some of the information that you need to provide when you do protest your property. So those will all be coming up in the April webinar that we do April 21st. This webinar we will make available on our website. It may take a day or so before we're able to get the video compiled and uploaded, but it will be on our website again, www.traviscad.org. There's a wealth of information for you there on our website. And again, thank you so much for joining us, and I hope to see you next time.